was a particularly strong print for food retailing. It's quite a key component of overall retail sales. It's worth about 40% of total retail, and that was up a pretty decent 0.8%. And that is likely to reflect increased expenditure, particularly in supermarkets and the rest. You can see as well some weakness in some discretionary spending, cafes, restaurants and takeaway in the month of February, and other retailing as well. So you're starting to see some early signs of what the virus and the social distancing measures are having on retail sales, but you'll see much more of it in March and April when, much stronger social distancing measures came into place, and particularly the shutdown of non-essential type retail. So it will be interesting to see what will happen. I suspect again in March we will see significant strength in food retailing, supermarkets in particular, but we'll also see much bigger falls in the likes of cafes and restaurants, other discretionary spending like department stores and other retailing. So it will be a mixed picture, but overall we are expecting to see, more weaknesses as we go into the months ahead as these social distancing measures come into full force.
So Lynn, in terms of, I'm curious as an economist how you're modelling the medium term and the longer term expectations of what the potential recovery looks like, because we've long stopped talking about a V-shaped recovery, even a U-shape may be in doubt. Is it more of an L shape in the sense that some output and productivity is really lost permanently? What is your best case assumption as to what 6 months on, 12 months on looks like, given that we know for certain that these social distancing measures will be in place for 90 days at the minimum?
That's right. I think a lot of the focus is on what the economy and the path of growth looks like when we come out of all this, hopefully in 6 months or so. Don't think there's any dispute. We are in recession at the moment. The question is the depth and the duration. And so, the discussion around is it a V-shaped or more L or U is the right discussion, because it really is about the trajectory of growth on the other side. At the moment, the way we see things is that it's probably none of those letters. We think of it more in terms of a reverse tick. And so the best way to describe that is output falls sharply, particularly in the first half of this year, especially Q2. We think we will get a little bit of a bounce back and recovery later in the year as the social distancing measures are lifted, and you'll get a bit of pent-up demand, I suspect, probably around late Q3 and Q4. So we will, I think, see a bit of a bounce in activity. But then for us, we also think that growth will be fairly modest thereafter, and that bounce and stronger activity later in the year will not be sustained. And we say that for two reasons, really, and so it is a fairly subdued outlook. The first is that Australia was actually pretty weak going into 2020. Growth was sub-trend, private final demand was flat. There was a reason why the Reserve Bank was cutting rates several times last year. It was a pretty soft economy to start. And secondly, a number of the structural headwinds, elevated levels of household debt, stagnant wages, low productivity, all of that will still be there when we come out the other end, and we expect that to temper the recovery and the pace of growth further down the track. And that will especially be the case when unemployment levels are elevated as well. So from our perspective, it's a bit more of a reverse tick, a big drop in output, it recovers, a bit of a bounce, and then fairly modest growth after that. We don't think we get back to pre-COVID type output levels until well beyond 2021.
Here in the U.S., we just passed the third stimulus package, and already we're eyeing the fourth and the fifth stimulus package, given it's pretty clear that the third package that we passed, at least here, was not enough. I translate that over into Australia, and I'm wondering if the fiscal packages that you've seen truly are enough.
So we've had 3 fiscal packages thus far in Australia, each larger than the last, and in particular the third package that we saw at the start of this week, a very large package, $130 billion. That's about 6.5% of GDP. But it's not so much the quantity, while enormous, it's probably the quality of measures. And of all the 3 packages, we would argue that the quality of this one was probably the best and will be fairly impactful in the economy and will go some way in tempering the expected rise in the unemployment rate over the next few months. So the introduction of a wage subsidy, a variation of some of the other similar type measures around the globe, tailored a bit more for Australian circumstances, we think will be very helpful. So I guess when you ask, will it be enough? There's quite a lot of stimulus in the system. At the Commonwealth level, it's close to 10% of GDP. The last package, I think the measures were particularly good. So it looks to be enough for now as all these measures flow through. I would make the additional observation, though, that the states in Australia are also stepping up and delivering fiscal stimulus. A lot of it very much targeted at businesses and SMEs, and so that will be helpful. But we know as well that if it's not enough, if this virus takes a turn for the worse, if Australia has additional issues as we go into the Southern Hemisphere winter, that the authorities will step up further if needed. So look, at this juncture, I think probably enough, but the door will remain open for further support if needed.
Sue Lin, RBC Chief Economist and Head of Australian Research, our thank you. Now, I do want to bring you some headlines. Dengue is rising now as much as 17%. That's after they are said to be making a compound for a flu treatment, Avigan. It's being touted as a potential coronavirus treatment. This is after receiving a request from the Japanese government. So again, Dengue saying on Thursday will now start producing a compound that is typically used in Fujifilm's flu treatment after a request here by the Japanese government to help solve the coronavirus. And as you can see, stocks clearly rising across the board there. Coming up next is sports leagues around the world are being canceled and suspended. Esports, well, they continue to operate. We'll speak to Ann Hand, Super League Gaming Chairman and CEO, about how the virus is affecting events. This is Bloomberg.
The opportunity, we were able to give a big push to develop our catering business. So that is something that we think we'll continue to work on.
Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Who shaped my views were the women I talked to.
I think Facebook's probably won in a lot of ways.
Running Microsoft was a ton of fun, and it was, it's kind of inspirational.
This is your weekly review of the most important business news and interviews from Bloomberg Television around the world.
Yet another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
You're watching Daybreak Asia. Let's get you a quick check of the latest First Word headlines. We are watching, of course, the coronavirus numbers has hit an unwanted milestone. Global infections have topped 1 million just 4 months after it was first reported in the Chinese city of Wuhan. Latest figures say 50,000 people have succumbed to COVID-19 so far, which has rapidly eclipsed all recent outbreaks in scale, with fewer than 20 nations in the world remaining free. John Hopkins says the US has the most reported cases at more than 230,000. Shutdowns and supply chain disruption from the virus have pushed US jobless claims to a record. More than 6.6 million people applied for unemployment benefits in the last week. That is more than double the total from the week before. The bleak numbers come a day before the US official payrolls numbers, which are expected to show a monthly decline for the first time since 2010. The Fed's response to the coronavirus fallout has seen the balance sheet expand to a record $5.81 trillion as policymakers continue big purchases of treasuries and mortgage-backed securities. Total assets rose more than $550 billion in the week through April 1st, with the scale already dwarfing the programs the Fed took in the wake of the financial crisis a decade ago. Well, oil markets were jolted on both sides of the Atlantic after President Trump suggested he has the key to resolving the standoff in between Saudi Arabia and Russia. The president has spoken to leaders in Riyadh and Moscow in the last 2 days, saying he expects a solution can be found and that he would intervene if necessary. The kingdom is now calling for urgent talks between OPEC and its independent allies.
Now, Heidi, the coronavirus is having a huge impact on the world of esports, events being postponed and leagues moved online. But there are also some positives. Our next guest says viewership has spiked in the past few weeks, almost 100,000 new registrations, setting records of concurrent users and servers online. Joining us now from Los Angeles is Ann Hand, Super League Gaming Chairman and CEO. And great to have you. Interesting to see the number of increased users that you're seeing. How, though, do you expect to turn that into increased revenue and profit in the coming months?
Yeah, absolutely. So we've seen a 20% increase in our user base during March. That compares to about a 6 to 7% increase on the prior months. As you mentioned, we've seen we believe now the current March numbers, over 200,000 new users to our platform. And what's exciting for us is that we're able to really solve for a different way for people to stay connected. Gaming inherently has a lot of social and community built in. How it translates into revenues is really twofold. The first one is more players engaging in Super League, pushing their gameplay through it, and more opportunities to monetize the gamer themselves. We have all kinds of ways for them to upgrade their gaming experience. So there's a direct-to-consumer angle. And then, of course, the more people that we have engaging in the platform, that widens our eyeballs and our ad inventory. And right now, when you see how much advertisers are struggling with a lot of canceled other events and activations to redirect those marketing dollars and reach people, especially that elusive Gen Z millennial gamer, right where they are around their passion of the game they love, we offer a marketing channel for them.
And I just spent 6 months in San Francisco, and I was shocked at the increased pressure there are on a lot of these startups to start to turn a profit, to translate some of that revenue growth into bottom line growth as well. You've gone public in a volatile environment. What has it been like being public in this environment, and what has been the increasing pressure to start to turn a profit?
Yeah, it's a great point because we launched the company on NASDAQ a little over a year ago. Obviously, we're a micro-cap company. We thought that there was a lot of thirst and desire for the public markets to participate in esports and not a lot of options out there. And being a pure play, a game title and location agnostic company, so wide range of gamers we speak to, and you can play in all kinds of locations, but most importantly right now in the wake of COVID, you can play right from the comfort of your home. That said, absolutely, small cap, it's tough. They really want to see not only that quicker top-line growth, but also that path to break even and profitability. We pointed the investors all last year to some essential KPIs that we said, if you believe we're doing this right and we meet or beat these, then the revenue streams will inevitably flow. No different than the way that Facebook early on really focused on user acquisition out of the gate. And we were able to materially beat those KPIs. But we really have looked at 2020 as the year of monetization for the company. And, in these dire circumstances that we're in, we always knew that gaming was somewhat recession resilient. And so the explosive growth that we're already seeing just in the last 30 days, the pretty significant increase in our advertising sponsorship pipeline is telling us that we have a real opportunity or window here. Gaming is already pre-COVID. It's bigger than TV. It's 3 times the global film box office. If people are isolating at home, their enthusiasm and interest and engagement in gaming is only going to continue.
And how much retention of these spiky numbers that we're clearly seeing from working from home, from self-isolation, from schools being cancelled, how much of that do you expect will be retained once we get out of the pandemic immediate threat?
Yeah, I mean, it's interesting because in some ways these are very sticky customers. So I don't expect to see these levels drop off. In fact, if anything, what you'd argue is that we're really getting to critical mass here. You know, we have over 1 million kids right now, about 500,000 monthly uniques playing in our youth kind of digital forum called mindhut.com. We just this week hit the highest number of viewership ever on our Instagram and TikTok channels. We hit about 30 million views in the month of March. The more that you have critical mass and interest and engagement, we expect those numbers to continue. And look, I mean, here's the hard reality. I mean, live sports, as we know it, is kind of over for now. For some kind of undefined period, whether it's your high school tennis team or Wimbledon, whether it's a pickup basketball game or the NBA season, there's not a lot of ways for people to connect anymore with live sports, and yet there is one that emerges, and that is that notion of the one sport that's virtual, and that's competitive video gaming. So whether it's at the professional esports level or just the ways that I can right now help the youth soccer league across America, or maybe help a professional league connect to their fan base, people are gamers these days, and they're not growing out of it. And competitive gaming done safely at home can be a way to create connectivity for those kind of sports fans and for those advertiser dollars, even at a time when they can't get out and play the other sports that they love.
And with children being a big part of this, how real are the concerns about addiction? How real are the concerns that there'll be government oversight of this very quickly?
You know, that's always been a huge tenet for us from the earliest days of our brand promise, is a very family-friendly brand. We have a pretty high line on sportsmanship and code of conduct that we enforce. Actually, our youth product has always been COPA compliant and is quite beloved by parents because it's a safe gaming forum, and parents are allowed to create private servers for their kids and control who's being invited into that server. So you think about right now the 10, 12, 14-year-old who wants to stay connected to their friends from school or even just their friends on their neighborhood block. They can use Super League and our different portals as a way to help them stay connected and social and do it in a safe way so you know exactly who your kids are playing with.
All right, Anne Han, great to have you on with us again, Super League Gaming Chairman and CEO. Well, let's take a look ahead on what's to come on Bloomberg TV this Asia Friday. We'll be assessing the impact of the coronavirus and the impact that is being seen on the Indian tech sector. We'll be joined by Tech Mahindra's CEO. This is Bloomberg.
I hope that banks will follow, and we have seen other banks following the ECB recommendation this morning. Besides UniCredit, I think it's important for banks to be here to support the economy. Banks are part of the solution.
shares of China's Starbucks rival Luckin Coffee plunged more than 80%. This is after the company said it's investigating claims of fabricated sales. Sue Keenan has the developing story. And Sue, we're talking about hundreds of millions of dollars in sales. Am I right?
Yeah, the board actually is investigating reports that senior executives and employees fabricated transactions. And according to a filing, which is where the company's statement came from, they're now questioning $310 million in sales. That's a fairly large amount. Now, the filing showed that the company actually admitted that its chief operating officer and several employees that reported directly to him engaged in what they're saying was, quote, certain misconduct. And they went on to state in the filing that, quote, certain costs and expenses were also substantially inflated by fabricated transactions during the same period. Now, again, that's a quote from the filing. The special board committee that's investigating the matter did not verify that there was any problem with the actual numbers, but that they are looking into them. And again, if you look at the charts, it was a significant decline. Intraday, it was an 81% drop at the trough of trading, but at the close, it wasn't much off of that. It closed down 76%. Needless to say, it's the biggest one-day drop in the company's history. It was a very successful IPO in May of last year, in that you've got some pretty big hedge funds involved.
Yeah,
Taylor?
and so in terms of the players in this, right, two very well-known short sellers have been going head-to-head on Twitter about this. So what's the latest drama there?
Well, that's what's sort of fascinating, because you have two very well-known short sellers that engaged in a feud, if you will, on Twitter about the company back in January. First, you have Muddy Waters Capital, the CEO, Carson Block. He came out on top, by the way. And Andrew Left of Citron Research, who took the opposing position. On January 31st, Block tweeted that he had a short on Luckin Coffee after receiving what he said was an unattributed lengthy report, about 80-plus pages, that indicated that there were some alleged accounting issues with the chain and that it was a broken business model. And then 2 hours later, you had Left coming out defending the coffee chain in a tweet of his own and saying that Luckin's business was, quote, on fire in China. Fast forward to what we've got going on now, and clearly Muddy Waters came out on top. In fact, Left sort of said, more power to Carson Block. In any event, there'll be more to come on this one. Back to you.
Sue Keenan in New York. Heidi.
All right, Sue Keenan there in New York. Yeah, Taylor, before we hand it over to Bloomberg Markets at China Open, let's get you a quick look at how markets are trading at the moment. We're seeing, when it comes to Japan's Nikkei 225, a little bit of upside there of just about 0.7%. South Korea, the Kospi just holding its head above water. We are seeing some choppy trade when it comes to the ASX, so now falling into negative territory. This despite a retail sales beat for the month of February, Taylor.
Well, and coming up, Heidi, we will have more insight on market prospects with UBS Head of China Strategy, Wendy Liu, and Morgan Stanley Chief Asia and EM Strategist, Jonathan Gardner. And that is it from Daybreak Asia. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
A grim milestone is reached in the coronavirus pandemic. 1 million people have now been infected worldwide and 50,000 have died.
President Trump jolts the oil markets by saying he has the key to resolving the price war between Saudi Arabia and Russia. He may even intervene.
And a bitter taste for Luckin shareholders as the company admits it's investigating fake sales. The claims reach up to senior management.
It is 9 a.m. in Beijing, Shanghai and Singapore. Welcome to Bloomberg Markets China Open. I'm Tom McKenzie.
And I'm Yvonne Mann. We are counting down to the opens of trade in the Chinese mainland and Hong Kong. Tom, let's take a look at the market action right now. We're pretty much going sideways when it comes to stocks here today. That's despite the U.S. session seeing a pretty decent one, which was really fueled by the oil price, which we'll talk a little bit more about. And they also really shrugged that 6.6 million print on jobless claims in the U.S. The market's able to look through that. Stimulus could be on the way, so markets looking past the bad data. Asia set to follow these gains, although we are seeing a pretty mixed picture in Singapore just coming online, lower by 1/5 of 1%. Malaysia's flat. A50 futures also pointing lower. We did see some strength, though, coming back into the currency for the renminbi. We're back below 710 now, so 709.89 for your renminbi. Keep in mind, Taiwan is closed today. We're also expecting in Malaysia a central bank to have a virtual press briefing on its 2019 annual report. See if we get any clues when it comes to monetary policy moving forward. Flip of the boards. We're also watching when it comes to oil because it really was just one tweet from President Trump that basically jolted the oil market, saying he had brokered that deal with Russia and Saudi Arabia. We saw WTI spike as much as 35%, the biggest ever one-day move in percentage terms, but didn't last long. We've given back after Riyadh basically said, hold on, we need to have an emergency OPEC plus meeting first. Oil, we are seeing heading back lower. We're still holding around 29 for Brent. WTI also holding around 23.84 right now. Oil still on track to snap 5 weeks of declines after, of course, that 60% plunge that we've seen in oil prices of late. You did see a little bit of strength coming through to some of these oil currencies like the Norwegian krona and the Canadian loonie. That's coming off a little bit now as well. The Aussie, though, still staying under a bit of pressure here today. We did get those retail sales numbers out of Australia. We're lower. We're holding around 60 U.S. cents. The Malaysian ringgit still also seeing some weakness despite that oil bump. But we're watching the energy sector in particular because that was what fueled a lot of the rally overnight as well. Seems like that is the case here today in the Asian session. And of course, watching Nifty futures, of course, that could be that oil hit that's going to hit India, also reopening after that holiday, Tom.
Yeah, and as we mentioned in the headlines, we are taking a look at Luckin Coffin. The Chinese Starbucks rival plunged as much as 81% overnight after saying it's investigating reports that senior executives and staff fabricated transactions. We're going to have more on this developing story later in the show.
Yeah, let's get to our top story now. The number of coronavirus cases worldwide has surged to 1 million, a milestone Which is quite alarming, of course, reached just 4 months after it first surfaced in the Chinese city of Wuhan. From there, the virus spread rapidly to other parts of the world, and the U.S. and Europe now have the most number of reported cases and deaths.
Now, Vice President Mike Pence has told Bloomberg that more than 100,000 Americans are now being tested daily for coronavirus as the government tries to ramp up its lagging response to the outbreak.
Well, what I can tell you, David, is that because of the public-private partnership we forged with these vast commercial labs that your listeners know, testing over 100,000 Americans a day, moving with point-of-care test. It literally is a 15-minute test that people of Abbott Laboratory machines that are around the country. We're areas that are seeing an impact today, but we want to distribute those as Abbott Laboratories making about 50,000 tests. What you'd implied is the kind of surveillance testing to be able to do the kind of contact tracing that would limit the exposure and the spread of the coronavirus. But the last point is day, the number of cases that are coming out, where they're state analysis, and stockpile FEMA, but with healthcare distributors around. We're working closely with governors to support their requests, whether it be for personal protective equipment or field hospitals, and we'll continue to do that around
equipment. And also, is there a serious consideration being against each other ventilators? Is there a thought that we should have a central location? It would be under you, I assume, at the task force that will decide